Welcome back to Investing Talk podcast.
Good to be back.
Today we're getting into a company that just, well, made a huge splash on the public market, Circle.
The company behind USDC. Big name in stablecoins.
And we're looking at this just days after their IPO with some potentially major events possibly just around the corner.
That's right. There's a lot happening. So our focus today is really to try and, unpack the key drivers for Circle. Understand that market reaction to the IPO, look at what's coming up, especially regulation.
And figure out if that current valuation holds up based on what we're seeing.
Let's get into it then.
Okay, so Circle. They hit the New York Stock Exchange when?
Just this week, right? June 5th.
June 5th, 2025, yep. And it was quite the entrance.
How so? What were the details?
Well, they raised a good amount, around $1.1 billion, sold 34 million shares. And importantly, they priced it $31. That was actually above the range they initially set out.
Okay, so that already signals pretty strong interest before trading even began.
It does. Hinted at what was coming. And then the opening bell rang, and, well, things got a bit wild.
Wild is one word for it. The stock opened way up at $69.
Wow.
Didn't stop there either. It climbed all the way to $103.75 at one point during the day.
Seriously, over $100.
Yeah, before closing back down a bit at $83.23.
Still, that's a, 168% jump from the IPO price on day one?
A massive first-day pop.
Yeah.
Tells you a lot about the initial market feeling.
So what does that kind of surge suggest? Just pure hype or something more?
Well, it certainly screams intense enthusiasm, high expectations. That closing price put the company's valuation around $18 billion.
Fully diluted.
$18 billion.
And it wasn't just the price. The IPO itself was apparently oversubscribed 25 times over.
25 times.
Yeah. And the trading volume was huge on that first day. Over 47 million shares changed hands.
Okay, so clearly massive investor interest. People wanted in.
No question. There's a strong belief in the story, even at that high price.
So let's talk about that story. What is the core business driving all this excitement? Okay, fundamentally, Circle issues stablecoins, primarily USDC. The dollar-pegged one we all know is the second biggest. They also have EURC for the euro. And their platform is basically built to help people and businesses use these stablecoins for payments, finance, that sort of thing.
And USDC itself has been growing like crazy, hasn't it?
Oh, phenomenal growth. USDC's market cap is sitting around $62 billion now. That gives it something like 27% of the stablecoin market.
Which is significant, but still behind Tether.
Still number 2, yeah. But the growth rate is the key thing. Circulation was up 78% just in 2024. And get this. Monthly transaction value passed $1 trillion by November last year.
$1 trillion a month.
And historically, over $20 trillion has moved using USDC. That kind of adoption is a huge plus for them.
Okay, huge usage. But how do they actually make money from this? Is it fees per transaction or?
Right. This is really critical to understand about Circle right now. Almost all their revenue in 2024, like 99% of it didn't come from usage fees.
No. Where then?
It came to the interest they earn on the reserves backing USDC.
Ah, okay.
Those reserves are mainly held in very safe assets, primarily U.S. Treasury securities. So out of about $1.68 billion in revenue last year, roughly $1.6 billion was just interest income.
Wow. Okay, so less like a Visa processing payments and more like a money market fund almost, earning yield on assets.
That's a pretty good analogy for the revenue stream, yes. Their profit engine in 2024 was overwhelmingly tied to interest rates on government debt.
So not directly linked to the volume of USDC transactions, but the amount of USDC outstanding and the yield on reserves.
Primarily, yes. Now, they are trying to diversify. They launched something called the Circle Payments Network, CPN, this year.
Where?
The idea there is to generate more service-based revenue by integrating stablecoins into more traditional financial workflows. But for now,
it's all about that interest income.
Pretty much.
Okay, so you've got this strong adoption trend, a growing stablecoin market. Overall, some projections are massive, right? Like $1.6 to $3 trillion by 2030.
Yeah, driven by things like institutional use, cross-border payments,
Yeah.
big potential tailwinds.
But that revenue model, being so dependent on interest income, that feels like a risk. What happens if rates fall?
It's definitely a vulnerability. And we should circle back to risks. But first, there's this other major upcoming factor that could really change things for them.
Right. This brings us to regulation. Feels like the big catalyst hanging out there.
It really does. Specifically, this piece of legislation called the Genius Act.
The Guiding and Establishing National Innovation for U.S. Stablecoins Act. Quite a name.
Yeah. But it's a serious bipartisan effort in the Senate to finally set up a regulatory framework for stablecoins in the U.S.
And the timing right after the IPO seems pretty significant.
Couldn't be more relevant. And this bill has been moving. It got through the kind of banking committee back in March. Pretty strong vote, 18-6.
Okay.
And then more recently, May 20th, it passed what's called a cloture vote in the full Senate.
Which is a key procedural step, right?
Right.
Means it likely has the votes to overcome a filibuster.
Correct. It got 66 votes, well over the 60 needed. Shows solid bipartisan backing.
So if it passed cloture, what's the next step? A final vote? And when might that happen?
That's the crucial question. The talk is that a full Senate floor vote could happen very, very soon. Like maybe even June 7th or 8th.
So potentially this week. Wow.
Potentially. It seems close.
Okay, so if this Genius Act does pass, what would it actually mean for Circle and USDC? Why is it seen as such a big deal?
Well, passage would create, for the first time, a clear federal framework, licensing, supervision for stablecoin issuers like Circle. It would set clear rules for reserves, require audits, disclosures, things like that.
And that's good for Circle because
Because it adds legitimacy. It reduces uncertainty. It could significantly boost trust, both for regular users and, maybe more importantly, for big institutions looking to use stablecoins. Wider adoption could follow. Circle itself has been very supportive of the bill. They see it as beneficial, creating clear rules of the road.
Makes sense. So that SEC statement back in April saying USDC isn't a security was good news, removed one cloud.
Right. It was positive, reduced some regulatory overhang, but it's done.
But this potential Senate vote on the Genius Act, that's the big forward-looking event everyone's watching right now.
That seems to be the main potential catalyst on the horizon, yes. The one that could really shift the ground under their feet.
Okay, let's connect this back to that valuation, that $18 billion figure on day one. How do we mesh that with the financials? $1.68 billion in revenue, sure, but only $18 million in net income last year.
Right. If you just run the standard valuation metrics, it looks interesting. That $18 billion market cap gives you a price-to-sales ratio around, let's say, 10, which is high, but maybe not insane for a tech IPO.
Okay.
But the price-to-earnings ratio, the PE, because that net income was relatively small, the PE is astronomical, somewhere around 970 or higher.
970.
Yeah, extremely high.
So just thinking about traditional investment styles, what makes something a value stock? Low PE, stable earnings.
Typically, yeah. Value stocks usually have lower PE ratios, maybe low price to book, often pay dividends. Stable, predictable businesses trading below what their assets or current earnings might suggest is fair value.
So based on those metrics, Circle is definitely not being valued like a traditional value stock right now.
Oh, absolutely not. High PS, near infinite PE, no dividend, income highly dependent on external rates, plus that crazy IPO day volatility. It doesn't fit the value mold at all.
So the market must be looking at something else entirely. Growth potential.
That's the key insight here, I think. It's being valued as a growth stock, purely on future potential. The market is betting heavily on the massive expansion of the stablecoin market and, crucially, on the idea that regulation, like the Genius Act, will unlock even faster growth and adoption for USDC.
So people are paying a big premium today for the earnings they hope Circle will generate tomorrow.
That's the essence of it. It's a bet on the future story, not the current financial snapshot.
You mentioned the market cap hitting $18 billion. Were there other views on its value?
There were. Well, the market price reflects that $18 billion level. Some analysis, commentary seen online suggested a fair value might be significantly lower, maybe more in the $5 to $10 billion range based on more traditional fundamentals.
Implying it could be overvalued by those measures.
From a classic fundamental perspective, perhaps.
But despite that, we saw huge institutional interest, right? BlackRock, ARK Invest were mentioned.
Correct. Reports mentioned BlackRock having a significant stake, maybe 10%. ARK Invest showed interest buying shares for its funds. That, plus the IPO being 25x oversubscribed. It shows very strong market confidence from significant players, despite those high valuation multiples. They clearly buy into the growth story.
Okay, so huge potential, massive market excitement. Let's talk risks. What are the main challenges or potential downsides flagged for Circle?
Well, number one is that revenue concentration we keep coming back to, that near total reliance on interest from Treasury reserves.
Right. If the Fed starts cutting interest rates significantly,
their main income source takes a direct hit, potentially a big one. That's a major vulnerability.
What about the Treasuries themselves? Any risk there?
The possibility of a U.S. debt default is mentioned as a hypothetical risk. It's seen as very unlikely right now, especially before 2027, given the debt ceiling situation. But if it ever did happen, it would be catastrophic for Circle's reserves and the USDC peg itself. Highly improbable, but a background risk.
In competition, it's not like USDC is the only game in town.
Definitely not. Tether and USDT still dominate the market share, about 67% to USDC's 27%. That's a big gap. Plus, you have other players like Ripple making moves and the potential, longer term, for traditional banks to launch their own competing stablecoins. It's a competitive space.
Regulation 2, we talked about the U.S. Genius Act as a potential positive catalyst, but could regulatory changes elsewhere be a risk?
For sure. While the U.S. focus right now seems favorable at this bill, Circle operates globally. Differing or stricter regulations in other key markets could absolutely impact their business and expansion plans. Regulatory risk cuts both ways.
And just the sheer volatility we saw on day one, is that a risk in itself?
It highlights the speculative interest, certainly. The huge price swings mean the stock is likely to be pretty volatile, especially in the short term. Sensitive to news, sentiment shifts. There's also a green shoe option, letting underwriters buy about 5 million more shares. But that's relatively small, maybe 2% of the total, so probably not a huge dilution worry. But the volatility is real.
Okay, so let's try and pull this all together. We have Circle, a major stablecoin issuer, huge growth in USDC adoption.
But with a business model currently very, very dependent on interest income from its reserves.
And the biggest single thing looming on the horizon seems to be this potential Senate vote on the Genius Act, possibly this week.
That's the key potential catalyst everyone is focused on right now. Could bring much-needed regulatory clarity.
And the market seems to have priced in a lot of optimism about that clarity and future growth, giving it that hefty $18 billion valuation right away.
It's definitely being treated as a growth stock, yeah. Valued on future promise, not present earnings power.
So there's this tension. Huge potential upside if the market grows and regulation works out favorably.
Balanced against real risks around that concentrated revenue stream, competition, and just general market volatility for a newly public company in a fast-moving space.
That sums it up pretty well.
Feels like it captures the current state of play.
So as you're thinking about all this, here's maybe a final thought. How much of this initial excitement, this $18 billion valuation, is really tied specifically to the hope that the Genius Act passes quickly and cleanly? And what happens if the timing slips or the final bill looks different than expected? How does that change the calculation?
That feels like a central question right now, weighing the opportunity against the risk. How dependent is the current sentiment on that specific legislative outcome?
Something to watch very closely indeed. Keep an eye on Washington over the next few days. This could move fast.
Absolutely. Tracking that legislative progress seems crucial for understanding Circle's near-term path.
Well, thanks for joining us for this look at Circle's IPO and the factors shaping its future. We hope this breakdown was helpful.
Hope it provided some clarity.
If you found this valuable, please do subscribe, maybe give us a like or leave a comment. It really helps us keep doing these analyses. Thanks for listening.